Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the top 5 best stocks to buy right now that will not only prevent you from losing money during a stock market crash or an economic recession, but it could also build your wealth during a time of stock market volatility or economic uncertainty. So we're going to be looking at the top 5 stocks which have some of the highest ratings from Wall Street's top stock professionals. So for more videos just like this one, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's just jump right into today's stories. Recent economic data and earnings reports from a plethora of various companies have actually made the market overall very bullish. However, despite this temporary good news, the Federal Reserve still anticipates that they are going to increase interest rates at 0.75% in September, which could cause the stock market to drop, which gives us as investors a fantastic time to buy fantastic companies for a cheap price. So when we go over these companies, remember that these are long-term investments, which means you are going to be willing to hold these companies for the next 5 to 10 years because they are absolutely fundamentally solid and these companies are known for building wealth. So here are 5 stocks and companies that are highlighted by Wall Street's top professionals. And the first company we're going to talk about is ArcBest, ticker symbol ARCB, which is involved in the transportation sector. The ARCB share price currently trades for $92 per share, which means that this company is technically undervalued because stock professionals think that the company is worth anywhere between $94 on the low end and $140 on the high end over the next 12 months. Despite supply chain challenges, this company has actually managed to perform extremely well, which is why it has caught multiple analysts and investors' eyes. They even released second quarter results that came in above expectations, which is extremely positive and bullish despite various bottlenecks and various shortages that have negatively impacted supply chains. A Cohen analyst chimed in and he's actually encouraged by the company's overall strength that came from their second quarter results. I also am very impressed with this company because their financial results show just how resilient this company is even during a time of uncertainty in their particular sector. The Cohen analyst even went on to talk about their recent acquisition, which will not only bring them in more revenues in the future, but it's also going to act as a fantastic buffer for their business from volatility in their particular market. Now, just like all of the companies on this list, we do have near-term negative headwinds, which is why some analysts have actually changed their price target for these companies, but this will not impact their long-term stock price appreciation. The only thing this means for long-term investors such as you and I is that we get to buy these companies for even cheaper right now, and it's going to bring us in even more money as the stock price appreciates over time. So with this in mind, this is why this particular analyst lowered his price target for this company from $133 down to $127. But overall, the analyst says that he is very bullish on this company, which means he's very positive on it, and he has a buy rating for this particular stock. This Cohen analyst is actually ranked as the number 4 top analyst out of 8,000 analysts that are rated and listed on TipRanks. He has a very positive return rating to where 60% of the companies and stocks that he identifies have built extreme wealth for investors, and he has even brought in an average return of 26.6% per rating, which is absolutely insane. To put that into perspective, the S&P 500, which we will use as a temporary benchmark representing the entire stock market, brings in anywhere from around 8% to 10% per year. So this particular analyst is either more than doubling or quadrupling what the overall stock market would get you. So that's why we should really look into these companies that these stock professionals are advocating for. The next company we're going to talk about is Airbnb, ticker symbol ABNB. And this company is an online hosting marketplace operator that allows people to temporarily rent out a home or some other type of abode in a particular destination. And now they also offer experiences that you can go and do in that particular location. The current Airbnb share price is $126 per share, while stock experts think that the company could fall to as low or even below $100 or surge as high or past $214 over the next 12 months. Investors are seemingly unhappy with this company in the short term, despite its record-breaking booking results. In my opinion, this is somewhat of an overreaction from investors because when the company released their second quarter results, it actually reflected a strong surge in overall travel, level, which is very bullish and positive for this overall company. An analyst from Wells Fargo is actually very impressed with Airbnb's disciplined operating practices and their efficient execution despite various challenges in the overall macroeconomic environment, and he thinks that this company is going to be primed to give investors healthy returns over the long term. And for me, I tend to agree with him, especially if you plan to hold this company for the next 5 to 10 years, despite short-term pullbacks that we could experience in the stock price. The analyst even goes on to say that in the short term, the stock price could tumble and fumble, which is why he actually lowered his price target from $250 down to $185. However, he is still bullish for the long-term growth of this company. This particular stock professional is ranked 151 out of the 8,000 analysts that we are reviewing from Wall Street, and he has a 57% profitability rating, which is absolutely phenomenal, and he's generated returns for investors of around 18.2%, again beating the overall S&P 500 benchmark. So at minimum, we could put these companies on a watch list. Another company that this particular analyst likes is Pinterest, ticker symbol PINS, which trades for $23 per share, while stock experts think that the company is worth anywhere between $16 and $35 over the next 12 months. If you didn't know, Pinterest is a social media company that this particular analyst actually loves for the long term. But remember, the short-term headwinds and negativity that we are experiencing right now allows us to get these companies at a discount, which means it's going to help us build our wealth over the long term, which is why in the near term, this company is actually supposed to experience higher than anticipated operating expenses, and this company is under immense pressure for lower than anticipated revenues. And this is why the analyst lowered his price target for this company from $37 down to $34. But this has not stopped this analyst's positivity when it comes to Pinterest, because he has still reiterated his buy rating for this company and his long-term outlook. He even says, and I quote, "While we believe some investors remain skeptical of PINS's Idea Pins content strategy, we see an emerging content consumption/creation flywheel and think PINS is making the right moves to drive engagement while continuing to refine relevance and shopping tools," end quote. So overall, this is very positive and bullish for Pinterest over the long term, and if you need some exposure to a social media company, then Pinterest could be the company for you. Now, as we go further down this list, we're actually going to start talking about companies that I personally am extremely bullish on, and one of those companies is going to be Cirrus Logic, ticker symbol CRUS. The CRUS share price is currently valued at $86 per share, while stock professionals and stock experts think that the company is worth $85 on the low end and $110 on the high end. This company, according to this article, delivers optimized integrated circuits for a range of audio, industrial, and energy-related applications. Now, the reason why I am very bullish on this company is that they have very strong financials when I look at their balance sheet, and they also delivered very strong quarterly results. For instance, a Susquehanna analyst actually analyzed the company recently and became extremely bullish on the company's future growth prospects. And he even highlighted how this company has an extremely strong relationship with their largest customer, which is Apple. The analyst says, and I quote, "We believe their relationship with Apple has never been better, and the solid outlook provided this quarter only reaffirms our belief," end quote. More very good news about this company is that Cirrus announced a $500 million share buyback program, which is amazing because last year they had a buyback program to where they still have around $136.1 million remaining from that, and this is going to cause an increase in the overall stock price, so investors, now might be a good time to jump into this company, but always make sure to do your own research to make sure that this company and stock aligns with your own investing strategy and your own risk management policies and risk tolerance levels. The analyst goes on to say, "With almost $7 billion in net cash, we would hope Cirrus would accelerate these purchases in front of the strong outlook," end quote. And that's why this particular analyst reiterated his buy rating for this company and his stock price target of $110, which is a phenomenal price prediction. This particular analyst is one of the best analysts in my personal opinion, because not only is he ranked as a 5-star analyst, but he also holds the number 6 spot in the top 10 analysts on TipRanks, which means that he has successfully identified companies 73% of the time that has built extraordinary wealth for various investors as well as himself. And that's why he has an annual average return return rating of 25.4%, which again is absolutely phenomenal. Now, the last company we're going to talk about is one of my favorite companies, and that's Monolithic Power, ticker symbol MPWR, which trades for $537 per share, and that means it's already trading at the lower end of the spectrum according to stock analysts and investors, because at minimum the company is worth $530 and at maximum the company is worth $620 according to top tier and top rated analysts. This company specializes and makes power solutions in a range of various industries, including telecommunications and cloud computing. The company also delivered phenomenal results and upbeat financial metrics, which just added to their overall positive commentary. A Needham analyst even went on to explain, and I quote, "We believe MPS will continue to grow faster than the analog market, driven by market share gains, the ramp of new products/design wins, and co-development projects with tier 1 customers," end quote. So overall, this is extremely bullish for this company. This Needham analyst reiterated his buy rating, and he has a stock price target and or stock price prediction, which he increased from $500 up to $550 per share. The reason why we are highlighting this particular company and analyst is because, in my opinion, this is the company that I would want to buy, and this is a company I hold in my personal portfolio. I also want to mention that this analyst is literally rated as the #1 analyst from the database of 8,000 tip ranks and Wall Street analysts, to where 74% of the stocks and companies he identified has been extremely profitable for investors, and he has brought in a 45.1% average return per rating, and that's absolutely insane. So if you don't want to miss out on companies that will not only prevent you from losing money, but could be fantastic long-term buying opportunities that is going to build you wealth over the next 5 to 10 years, then please make sure to do your own research and look into these companies. And don't forget to smash that like button right now for more videos just like this one, subscribe for more content, comment down below one of your favorite companies to buy during this current economic environment, and I will see you in the next YT video.